Merry Christmas! What a past year it's been. We've finally made it into the festive season and the end of the year. Hope wherever you are, you're enjoying it with friends, with family. You've been able to take stock of the past year, and hopefully you're having a refreshing and relaxing back end of the year as we look forward and head into 2022. For a bit of fun, I thought what better way to spend our Christmas video than having a bit of a look of the Christmas wish list. Putting together a few of the different things that it would be great to see Santa put under the tree for 2022, both on a market level, both on the broader macroeconomic scale, as well as on a little individual company progression level too. We're going to unpack it all. This is my personal Christmas wish list. We'll see what Santa brings in the year up ahead, but I'd love to know your thoughts on it all as well. If you do enjoy this video, don't forget to hit the like button. Feel free to share it out. If you're new here, welcome. We make daily videos each and every day, so make sure you've subscribed and turn your bell notifications on so you won't miss any of our daily episodes. It's been a wonderful past year in 2021. It's been tumultuous. There's been a lot to take away, but there's also a lot of interesting opportunities moving up ahead into 2022. So these are some of the ones that have been going around in my mind, and I'm looking forward to the year up ahead. We'll see what Santa brings us moving forward. First and foremost, the leading narrative across many parts of this year has been the discussion surrounding inflation, the potential rising of interest rates, the excess liquidity that's been flowing through the system. We know that in 2020, we had the pandemic, the lockdowns, we were essentially in a no-growth environment, and economic growth had tapered, and so we needed a coordinated fiscal and monetary policy stance so that we were able to really start this economic recovery and have a sustained recovery back to normal times. However, as the recovery's picked up pace, we've realised that unfortunately we can no longer have these ultra-loose accommodative monetary policy settings. The excess liquidity has to be tapered down, and we've seen inflation picking up as well on the other side. The last print at the time of this recording, inflation was at 6.8%. That, of course, is at a level that the Federal Reserve now needs to acknowledge that it's no longer transitory and it's potentially more persistently embedded than they initially thought. As a result of that, they've taken proactive action and they're looking at tapering now. Initially, the taper was at $15 billion per month. It was going to end in June 2022. However, they've sped that up. They've doubled the pace of the taper to $30 billion per month. And they believe if all things continue as forecast, this should end in March 2022. That then also opens up the pathway for the potential of rate hikes, depending on the situation. They now have that optionality and flexibility. However, the dot plots at the last Federal Reserve meeting indicated that there may be up to as many as 3 rate hikes in 2022, and then following that on again in 2023. We know the markets are watching for inflationary pressures to ease as supply chains normalise into 2022. But we're all familiar with the taper tantrum in 2013 when Ben Bernanke announced the potential taper. We know what happened in 2018 as well with 4 rate rises throughout the year and the potential volatility that can come as a result. So first and foremost, I'm hoping that we have a smooth taper. Undoubtedly, there'll be uncertainties, there'll be a bit of volatility. It can't be avoided. But I'm hoping that we can have as smooth of a taper as possible. Federal Reserve, along with other central banks around the world, have been forecasting this. They've been telegraphing it. So it's not going to come as a surprise to the market. But I do think there's that extra layer now of uncertainty that the market needs to navigate with the Omicron variant and potential lockdowns or potential impacts to mobility around the world, maybe impacting the pathway out of this taper. It's going to be a fascinating time. We'll see how it plays out. I'd love to know your thoughts too. So drop in a comment below. Firstly, where do you think the economy is positioned moving into 2022? But let us know what's on your Christmas wish list as well. Drop in a comment. What are you hoping for as you look forward to the year up ahead? On the company progression front, there's a lot to look forward to into 2022. A range of different projects, a range of different opportunities to develop, grow, and really scale offerings from different companies and sectors that I'm interested in. These are some of the different sectors that are really catching my attention into the year up ahead. The EV battery materials cohort had a rapid run in 2021, really out of the back of the November election of Joe Biden in the back end of 2020. There were price signals that came through from lithium, as well as a range of other different materials as well. The biotech sector is so interesting, not only because of the opportunities in terms of the growth pathway ahead of companies that are successful, bringing products all the way from benchtop through to bedside, but most importantly, the opportunity to really make that tangible difference for really people who are experiencing troubles throughout the world. It's a really interesting sector, and it's one that I really will be focusing on and hoping that we see some sustained success from different types of companies that can make a difference globally. On the semiconductor front, it's fascinating. We know that the digital adoption is just picking up pace. And as a result of that digital adoption, new technologies are going to have to be developed to enable this transition to more and more complex technologies. And then mega cap technology. These names were many of the leading lights really over the past few years. They've had a real sustained period of growth, and I'll continue to look for those to see how they're positioned moving into the next year. So just really drilling down to that next level down. On the right here, I've got a couple of different companies that I personally have on the watch list that I'm looking forward to watching the progression of over the next year. On the EV battery materials front, I think project development is first and foremost. We all know about the forecasted supply shortfall that is potentially going to expand into the decade moving forward. There hasn't been a lot of supply coming on for some of these critical materials. So as a result of that, as demand picks up, this shortfall will potentially continue to expand and less projects can come online. So looking at the juniors, looking at the developers, and then the current producers to scale production, it's going to be very interesting. Then the EV adoption really is what's underpinning this mega trend in terms of decarbonisation, but most particularly the EV space. And so looking at EV adoption continuing, we know the key markets at the moment in Asia, in Europe, but looking at the US market as well and markets around the world really moving towards EVs, as we know that the decarbonisation headline is only continuing to grow. On the biotech front, there's a couple of key things that investors are looking for. Clinical success, of course R&D in the earlier stage phases as well, and then partnerships and commercial activity if it's successful and if the science and the data shows that there's some promise from the treatments. The semiconductor front, I think first and foremost, continued qualification and research and development. Technology, if you've got that edge, you want to continue to amplify that and expand that moat, expand that point of difference that you have as a competitive advantage. And then commercial agreements will naturally flow through from that if there's a use case for your product. And then mega cap technology, I think first and foremost, that sustained top line growth is important. So far, these companies have had lofty expectations, but they've continued to deliver at the top line, really exceeding expectations. But we know that valuations have come under pressure over this past year. There's been discussions about valuations. You obviously can continue to grow and grow into your valuation if the top line continues to expand, but I'll be fascinated to see how valuations and this discussion goes for the broader tech sector. In fact, these mega cap technology names are probably more insulated from the valuation discussion because they're cash flow generating machines in comparison to some of these more mid-tier technology names that have got long duration valuations priced in. They've got probably a while until profitability or cash flow. So it's going to be interesting to see the dynamic of this, particularly in a rising interest rate environment. And then flowing on from that, the clean energy transition. Top of my list, I think, not only for an investment front, but also for the world, because it's important that we move towards a decarbonised society. It's really watching this clean energy transition continue to pick up pace. Seeing a sustained focus on decarbonisation, both from a government lens, who can drive it at a policy level, but then also the corporate lens. And we've seen this investment coming through from corporates and that focus. As we've mentioned, the EV adoption continuing to pick up pace, which will drive demand for those EV battery materials. I think a willingness from the incumbent automakers to transition to EV would be a great topping of the list as well. We've seen this focus. Automakers around the world have really shown a willingness to transition to EV, to invest heavier, but they're obviously going to be leading the line and really helping to drive this EV adoption as we move down the cost curve as well with more investment. So seeing this would be top of the list. And then finally, alternative energy solutions to be explored to help to drive down emissions broadly. We know that electrification is fantastic and it can help to decarbonize many industries, but it can't decarbonize all industries. Potentially alternative investments in spaces like nuclear with uranium or greener hydrogen, as we're already seeing, but a bigger focus from this would be fantastic to see as we have this coordinated effort globally to move towards this decarbonized society. I think it's going to be important, and I really hope that as a society we're able to learn to live with the virus. There was a period at the back end of 2020 when it looked like we'd gotten the best of Delta and we were able to move into this new normal. However, of course, Omicron has resurged, the Delta variant came back, we had to go back into lockdowns into different areas of Australia as well as globally. It looks like we're going to have to learn to live with the virus. We won't be able to eliminate it immediately. And so I think top of the list, not only on an investment front, but I think all of us as society are hoping that we can move towards a time where the virus will no longer threaten us in terms of mobility and for lockdowns. It's been difficult. I know many people haven't been able to see friends or family over these past periods, but the borders are starting to open up again. We're starting to get mobility domestically as well. The lockdowns are starting to ease. So hoping that we don't get any more variants flaring up, no more fears about resurgences of new variants or cases, and that hopefully we can just get back to that new normal. Of course, we still are awaiting news surrounding the Omicron front and hospitalizations, seeing if it is as lethal or if it's not as lethal, if potentially that may become the dominant strain, which actually could be a positive as we move towards that next stage of the virus and potentially to a more endemic stage. And then I think a return to normality provides the best chance for the economy, small businesses, and life for us to restart. We know that there is this real willingness as a society to just get back to how life was. And I think we've seen it as the borders have come down, as lockdown restrictions have eased. It's been fantastic to catch up with friends, with family. I'm sure you're enjoying it probably during this festive season, this Christmas period as well, to be able to catch up with friends and family and get back to what life was. So this really is top of the list because it's so important. And then building on that, and what will really flow through that is sustained economic growth. We've had really strong resurgence and economic recovery from the lows in 2020 with the growth slowdowns, but really we've still got these sustained forecasts for 3 to 4 to potentially 5% GDP growth in many of the developed nations, including Australia, including the United States. What's important about this period of the recovery in comparison to the last 12 to 18 months is that the fiscal stimulus and this accommodative monetary policy setting are no longer available. The economy and the recovery are going to have to stand on their own 2 feet. However, we do know that pent-up demand is often discussed. We've seen it, whether you're looking around at the bars and the pubs, or if you're looking at the airlines with people booking, people catching up for services types activities, or just being able to hang out with friends. There is a pent-up demand as we get back to this new normal. And this is really going to be facilitated by a high household savings rate. But we do know that the markets have been positioned very strongly. It's been one of the strongest bull runs over this past period. This has been underpinned by earnings growth and sustained earnings growth. But we need a consistent and really a robust economic recovery over this period to ensure that the earnings growth can be continued and so that we can live into and grow into the rich valuations that the markets are currently pricing. And I think on top of the list, with a bit of fun to be had, and I'm sure everybody's looking forward to it, is a potential Santa rally. If you're wondering what a Santa rally is and why everybody has been discussing it coming into this Christmas period, we'll leave a link up above to a video that we've done recently exploring the Santa rally. If you did enjoy this video, don't forget to hit the like button. Feel free to share it out. We make daily videos each and every day, so if you haven't yet, make sure you've subscribed and turn your bell notifications on so you won't miss any of the episodes. From me to you all, a big thank you for all of your support throughout this past year. It's been an absolute pleasure to bring out daily videos, 3 live streams a week on the Tuesdays, Thursdays and Saturdays, connecting with you all, growing and really learning as a community. I'm so grateful for the community we've got growing. I'm really looking forward to 2022 and beyond. I hope you have a fantastic Christmas period. Stay safe, stay well through this period as well. Let us know what's on your watch list, and really looking forward to a great 2022 up ahead. Thank you for joining us as always. Stay safe, stay well, and happy investing.